want to get your take on the futures. Moving higher yesterday after the markets moved lower on Friday following that weaker than expected jobs report. Surprised to see that rebound in futures, at least in the early going.
Yes and no. So we did have a weak jobs number from the BLS on Friday, but that was after a continuation of weak jobs data last week. And so I think this is turning into bad news equals good news for the market because it does solidify, not exactly, but we're close to that. It does look like the Fed is going to cut rates. Now the big question is going to be, is it 25 basis points? Is it going to be 50 basis points? Like the last time they cut last year, the first time they cut last year was 50 basis points. But the even bigger question is this the beginning of a rate cut cycle, or is it going to be a one or two and done? Investors are excited about the prospect of reduction in rates now and also going into next year.
Yeah, really that's the question, whether it's going to be 25 or 50. But also, I want to ask you a question I think a lot of people are trying to figure out. How would the market take a potential 50 basis point cut? Would that be a troubling sign, or would that be welcome to seen as part of a more aggressive rate cutting strategy?
I think at this point, the job numbers have been weak, and that's why we're in this position. At the same time, growth is overall solid. That's what we're seeing. I think a 50 basis cut move, a lot of people, including our administration, would be excited to see that. I think you could see the market positive.
All right, I want to get to your word of the day. It is divergence. Where are you seeing a divergence? Is it a divergence in the markets, or is there some other place you're watching that?
Well, a couple of different ways I was thinking of that word. First of all, it does have to do with a divergence in Fed policy and concerns around the labor market, and that's why we're talking about an interest rate cut. But at the same time, we're at these all-time highs, and futures are higher. We're going to get back to that 6,500 on the S&P pretty shortly. So I think the divergence between that macro policy and what's happening in the market, but then also in regards to asset classes. So you still have that continued divergence between large cap, small cap, outperforming, growth outperforming value. That's continuing. But even deeper, so one of the other areas is stock specific. So last week we had information from Broadcom. You've seen that stock go up 45% this year. It's within tech, right? So divergence within tech and within stocks. That's kind of the other piece I'm getting to. You see Broadcom up so much, and you see Marvell Technologies down 45%. So one company just announced a big $10 billion deal, increasing their market share, where Marvell is on the opposite end. So seeing that divergence within asset classes, within sectors as well. And so just, having to be more selective, but that divergence creates the reason to be even more selective.
I want to get to your pick. It's also a company that seems to be diverging from a trend that we were hitting earlier, where companies are unwinding and spinning off. This is Palo Alto Networks just recently buying CyberArk. Why do you think this is a good pick right now? I think it's important to note stocks had a big run up since earnings. What are the opportunities that you're seeing going forward?
Yes. So, it's interesting. One of the reasons why I chose this stock right now is there's been a little bit of a dip. It's not back to its prior highs because of that announcement of the merger that they're having, the acquisition that they're having. And so that pullback was an indication to us. We actually bought in during that time with a pullback. And one of the reasons for it is we're buying into AI and investing in the space in a number of different ways, not only in private markets, but within public markets. We're investing in the theme, not only with the mega scalers, but Palo Alto being one of those reasons. It's cybersecurity, right? So they're a leading company for cybersecurity. That's a must-have. Even if we have a slowdown in the economy, cybersecurity is not something that companies should be cutting back their spending on. So that's the primary reason for Palo Alto.